Hello, it's time for another money vlog update. Today is February 26th, 2023, which means it's been another 5 months since my last video. This one isn't going to be very fancy because I have very little time. I have a lot of stuff to do at work. And also, get this, I am in the process of buying a house. I know, it's crazy. I'm now at what solicitors call the searching phase. So I'll just talk a bit and then maybe cut out some of the ums and ums. I'll just say a few things that come to my mind. Again, the purpose of this vlog is to create sort of a record or a diary of what I'm doing and to reflect on my investments, and also just to force myself to do some of the work that's required and do some of the calculations. What I want to do in this vlog is A, list all of the stocks that I bought during the last few months. B, tally up all the dividends for 2022. So that's going to be exciting. And then, as always, I'll give a very brief summary over what's happened in the markets and what I thought was interesting. And then also give a very short outlook. And then finally, I'll check my portfolio performance. Yeah, and if you're one of my 3 subscribers, thank you very much for watching this. I appreciate it. And do feel free to tell me what you think about what I'm doing, and maybe I'll take some of your advice into account. Okay, so let's start with a list of all the things that I bought since my last update. In September, I first bought more shares in Barrick Gold as part of my gold strategy, as well as shares in E.ON. Now, E.ON still operates some coal-powered power stations in Turkey, I believe, but here in the UK, they're basically completely renewable, so I see this as part of my climate fund. October, I bought more shares in Rio Tinto as part of my value idea. So materials, commodities, they produce a lot of copper and stuff like this. And also a renewables energy fund called Next Energy Solar. My money for November went to BHP. So more commodities, more resources, again, a value play. December, I bought more gold stocks, Newcrest Mining. That's the one that's in Australia. January, again, gold, Centerra Gold, and the money for February went to a company called Gerdau. They are a Brazilian steel manufacturer. I think they are both undervalued and a great investment for dividends. They pay a very attractive dividend, I think, of almost around 10%, which is very, very high. That means that in total, I managed to invest £4,290 and 20p into the stock market since my last update, which is a lot, which is very, very good. So I did manage to save about £500 a month, sometimes even more. I guess once I have to pay a mortgage instead of rent, never mind all the repairs that a house usually requires, I may not be able to continue to save money at this rate, but I am proud that I have managed to keep it up so far. Now let's move to the dividends. Okay, so I've just finished tallying up my dividends. It's getting a bit chilly in here, so I'll actually put on my jumper. The results are based on today's exchange rate for the different currencies of my dividends, which means that the numbers I present may not be 100% accurate. And by the way, I've noticed that the pound has weakened against all currencies across the board, except the US dollar. And unfortunately for me, I expect this trend to continue for the foreseeable future. Yeah, it's also possible that I may have overlooked a few payments in this big table, but I think overall my calculations should be relatively accurate and close enough. Okay, so here is my dividend chart for the first half of 2022. Y-axis shows pounds earned, X-axis is time, blue is 2021, orange is 2022, and this is how the second half of the year has evolved. So in June, I earned about £124. In July, £171.80. That's a new record. In August, £36. In September, £130. October, also a very respectable £150. And then November and December coming in a bit lower at £22 and £59 respectively. In total, I have earned about £1,041 in dividends in 2022. That's a yield of about 2.5% on the book value of my portfolio, would be even higher on the market value, and 100% of the earnings were reinvested into my portfolio in one way or another. So I think that's pretty good. People have different opinions on styles of investing, but my opinion is that dividends are really important to stocks. It shows that the companies are working. They are like rents are to investments in real estate. So they're just really important. There simply has to be some sort of income. That's my view anyway. So again, I think getting £1,000 for free is pretty neat. And I am looking forward to filling in this graph for 2023. All right, next I will revisit the history of the stock market over the last 5 months. From the time of my last vlog in September, going into October, markets generally kept declining. During that time, I experienced my worst ever day in a single stock, and that stock is Funko. Now, I knew it was risky.
Finally, I wanted to buy a tiny bit of sort of a meme stock, or at least something that's a bit crazier. And so what I did is I bought a few more shares in Funko.
But still, I hadn't really expected what was coming. On November 4th, 2022, Funko collapsed by 60% on a single day. I lost about £350. Ouch. But after that, we put in a low roughly in October. Many markets recovered and kept recovering into the new year. The reason for that rally was that investors were more optimistic. They thought the rate hiking cycle might soon come to its end and inflation might ease, and employment, contrary to my expectation, actually remained very robust. Also, China ended their COVID lockdowns, I believe in December 22. And so now their economy might be reopening as well. The most important recent development in my portfolio is that Siemens Energy will buy out Gamesa. All my shares have been delisted, and at some point in the coming weeks, I should receive about €1,000 for it. Unfortunately, the buyout price is only about €18 per share, because for some reason, wind energy still isn't profitable. But I bought the shares for about €19, which means that this investment too will have lost me some money. Okay, moving now on to my outlook for the future. In the near to medium term, let's maybe say over the next 4 to 6 months, I would expect that the downward trend from last year continues. I think the unemployment rate will soon go up, there will be a recession, or at least we might see the early stages of it. After all, the Fed predicted some pain, and don't fight the Fed. Pain is what we're going to see. Central banks in the West are tightening very aggressively. That means reduced consumer spending, falling housing prices, higher interest rates, more bankruptcies and defaults, and higher unemployment. And that also spells a lower stock market. In particular, I think this high risk stuff should go down. The companies without earning, the meme stock, the tech sector, stuff like this. So for instance, cryptocurrencies, I could see Bitcoin go to $10,000 by the summer, or Tesla, which is still crazily overvalued, could go to say $100 by the summer. But regardless of the specifics, I would say in general that a recession is coming and that the stock market is very vulnerable. And that is actually, as far as these things go, a consensus view at the moment. Lots of analysts I've seen predict that a recession is coming soon.
And my guess is we'll see a more traditional recession, Sarah, this year. Policy itself works with lags. They'll get ultimately what they want, which is lower inflation, but it's going to mean a recession, though. It'll be the labor market. The labor market shedding a couple 100,000 jobs a month for a few months in a row, with unemployment now quickly moving up into the mid to high 4s, hurting so badly. For example, you could lose upwards of about 800,000 construction jobs, just construction alone, if you match what the labor market's showing on construction.
So then what do I think will happen next? I think once the recession takes shape, the Fed will end up with more pain than they bargained for. I mean, they've raised interest rates very, very fast, much faster than previously. And my view is that even a, say, 2% Fed funds rate would have caused a recession. Now that we're almost at 5%, the recession is going to be much more severe. We are headed, I believe, to a full-blown financial crisis again. A tiny glimpse into what may be coming was offered by the UK pension funds crisis in October 2022. What had happened was that interest rates in the UK 10-year gilt spiked up to over 4%, moving roughly in opposition to the equity markets, of course, and that was just too much for some pension funds to handle. According to the Bank of England, some of them were on the verge of collapse. That's very dramatic. So they had to be saved overnight with a freshly created £65 billion. For me, that shows that once 10-year rates rise to like 4.5%, 5%, there will be real stress on the financial system. What would that do to people's savings? There could be protests and radicalization. The Eurozone could through round 2 of its integration crisis. The problems in UK pensions may resurface. In short, there would be a lot of misery. So this wouldn't just be a run-of-the-mill recession. This would be a harsh, protracted, history-changing recession. That, of course, is a lot less consensual. Many investors do seem to think that the coming recession is by and large very mild. And then after that, we can just go back to the good old days. So my view is dramatically more pessimistic than the average. So then next, what could happen? Central banks are not going to allow this sort of a downturn. Draghi once famously proclaimed the whatever it takes to save the euro statement. So they'll just buy as much debt as they have to. We've seen what happened in the UK the moment there was a small problem, more quantitative easing. So that's why I think there will be more inflation. We are not going to get this inflation problem under control. Again, this is absolutely not consensual. Most people I hear on the financial news think that inflation is going to peak and then come down to 2% again, no problem. Boy, I wish that was true, because believe it or not, I'm actually quite a cheerful, optimistic person, but it isn't true. That's why I keep buying gold stocks. It's my best sort of kind of idea for how to profit off of elevated inflation. So far, this has not worked at all. But why? Because investors still think that interest rates will just go higher and higher and higher until the Fed has won its fight against inflation. And so they're thinking better buy a US Treasury that yields something than gold, which yields nothing. But they're wrong. You cannot win against inflation, not when there is about $58 trillion of global debt, with multiples of that in derivatives and unfunded liabilities. And not with a population of now over 8 billion people, where everybody wants to buy stuff and expect to get paid a pension someday in the form of money that also buys stuff. Where is all that stuff supposed to come from? So inflation it is. But even more importantly, climate change will soon kick into a higher gear. It's scary as hell. Honestly, I cannot accept that we ever talk about anything other than climate change. It's such a huge, looming, existential crisis. But instead, we just, live as if dangerous, man-made climate change was like it just goes away if we don't think about it. I believe humanity is slowly moving into a new phase. That sort of thing has happened many times in history before. Growth and then collapse. But never at this scale and never with such severe repercussions. It's of course a gradual transition, but still, there will be a lack of resources, protests, lots of natural disasters, climate refugees, a lot of misery. Yeah, I've added a fourth category to my portfolio because of this. So now I have value, that's material and resources and maybe a bit of pharma, gold, a bit of risk like Funko, and now new, also like some ESG investing, stuff like wind turbines, battery recycling, and so on. I also donate to climate organization once in a while. It's almost like a sale of indulgences, because I feel so bad about this. At least I'm doing something, even though I'm not doing enough. So my plan is to continue to invest into these 4 sectors over the coming months and hope for the best. In my Money Bee vlog episode 15, I made a bunch of predictions for the year 2022, and I'd like to evaluate those now. I'm afraid I was pretty off. I said gold should be between $1,800 and $2,200 and rather on the high side. In reality, the gold prices settled at $1,811 on the first day of 2023, so only just within the range. This year, I would predict that the gold price goes to $2,000 to $2,400. So I think 2023 could be a great year for gold. For the 10-year Treasury yield, I predicted 1.75 to 2.25%. Boy, was I wrong. It actually came in much higher at 3.95% on January 1st, 2023. This year, I don't know. It's really anybody's guess. I'm going to say 5%. But really, it could be anywhere, 2 to 8%. Either rates can actually climb to this height, say 6% maybe by the end of the year, or there is a financial crisis or a severe recession before the end of the year, and then the Fed could restart quantitative easing, buy lots of treasuries, and push the rate back down to something like 2% perhaps. Eventually, though, in, I don't know, 10 years or something, rates could go sky high. Finally, I tried to make sort of a prediction about the frothiness of the market, and I said that Tesla, which seemed very overvalued to me, should be lower in 1 year. And indeed, on January 1st, 2022, it was at $382, and on January 1st, 2023, at $118. So I think I got this one right. And I predicted again. I would say that these sorts of stocks, the tech stocks, the meme stocks, the consumer stocks, basically the entire market really is valued too highly given the interest rates. And so they will come crashing down. Yeah, so I guess I am 1 or maybe 2 for 3. I guess I'm just as wrong as anybody, but still, I think it's important to make these predictions to hold yourself accountable and to see if your economic outlook makes any sense at all. So I will add 2 sorts of predictions to this. The first one is about unemployment. I'm simply going to say in 1 year from now, unemployment is going to be higher, substantially higher than it is now. And the second one is about inflation. That's much harder to predict. I would just say it is much higher than most people think. I'm going to say the average inflation number is going to be 8%. So yeah, we'll see how I'm doing with my predictions this year. I actually hope I'm wrong and things will go much better than I fear. And with that, I finish my outlook for the economy. To finish up, here is a snapshot of my portfolio performance. It's not very good. My portfolio now has a value of £33,073.74. That is only marginally better than last time. I'm still down very big in the red, minus 17.65%. But during this phenomenal rally during January, I actually came back all the way to only minus 6%. Then with the renewed fears of Fed tightening and inflation, I've collapsed right back down to those lows. But Gamesa is currently booked as a loss of about €1,000, but I'm going to get that money after the takeover by Siemens Energy is complete, and that will also improve my performance. And of course, I'm going to use that money to just buy another wind turbine manufacturer. We'll see. Despite my abysmal performance, I still think I'm doing the right thing. And I hope I will continue to put some money aside every month and put it into the stock market. I might make my next update in maybe another 5 months, maybe in June or July or August before my summer vacation or something like this. Until then, I'm happy to have the privilege of being alive and to experience history and to see where my stock market journey will take me next.